So we have seen a steep decline in edible oil prices, which has kind of impacted your profitability also to some extent. I would like to know from you, how is the global oil prices scenario shaping up at the moment? Also in terms of sales in the edible oil portfolio, how is sales looking like?
See, globally the edible oil prices have come down, and today the prices are almost at the bottom. These prices are very comfortable for the consumers to buy, and that is why you can see higher consumption story both in urban and rural. We are seeing a growth of almost 20% in edible oil consumption by volume, which is not heard of. Normally it should be 8 to 10%, but now it's more than 20%. So that means people are consuming. Prices are comfortable. Out-of-home consumption has increased because of the big marriage season and very huge consumption of edible oil in the marriages. As far as margins are concerned, you see our margins are not basis price. We go on per ton basis or per kilo basis. Our margins are basis that. So even if the prices goes up or comes down, we generally keep it within the limits of our bottom line and top line, balancing it with the overall objective of meeting our bottom line targets. But we are very conscious about the market share, so we do pay more attention towards market share.
So what is the bottom line target?
I can't tell you about a target because it's all product-wise, it is region-wise target, but by and large, the present situation gives us a lot of comfort in terms of hedging at the right price, getting the hedge correct, overall buoyancy in the market, consumption with a higher volume, lower cost of operation, lower per head cost of whether it is manpower or fixed cost or anything. So overall the cost is lower.
So we have always seen the volume growth, is good for Adani Wilmar. However, if you look at the distributors, there is a growing concern that they are kind of piling up on excess stocks. It is not selling. What is it that is slowing the general trade? Is it the shift towards the e-commerce a major factor that is playing out, or is it something else? How do you see this?
See, this one has to see which product you are talking. During Diwali, what happens, there is a lot of schemes for the retailers, and there, in our business, we call it dumping of stocks. Now, dumping of stock is common during festivals because you ensure your retailers are packed with your stocks. This is good for other FMCG product, not good for food, because our food product needs shelf life are small, so they need to be faster turnaround. So in atta, we want 7 to 10 days. In sugar, we give 7 to 10 days. Oil, we give 7. And every week we go and cover. We also don't want them to take more stock because the price volatility is there. So we don't want them to be caught in any wrong thing. So we always give lower stocks and we keep them faster movement of stocks.
Got it. I would also like to know from you, in terms of the institutional demand, how is it looking like?
I think this year is fantastic, Shesha. The
growth,
number of marriages you see, and you see how Indian big fat wedding is happening. Now, what is it that is consumed? Basmati rice, edible oil, maida, sugar, and we are there in all the products. So, Indian weddings are a big consumer of essential commodities like this. Hotels are running full, and you see the reservations are not available. Banquets are full. Any marriage gardens are full. So all this put together gives a lot of buoyancy on the consumption of essential. This will continue till April 15th. So we have a very big marriage season this year.
Any growth projections that you keep for the institutional demand?
See, normally overall the company is growing at around 20% on edible oils and 30% on food. All including the out-of-home consumption. Although I think we should continue with it and do equally well.
All right, sir. Thank you so much for taking the time and speaking to us at NDTV Profit.